Hello, Warriors. Big Red Day working. Hello, Michael Schneider, AJ. How you doing, Bran? Like Bergman. Even the lowly dollar getting a bid today, team.
Morning, Dale.
How are you? How you doing, Ryan?
All good, mate. Sun's out.
Okay. Just wanted to
wait. Sun's out, guns out, Ryan? Is that what happens over there?
Yeah, I wouldn't say the guns are out. They're getting ready for summer.
No, you know the old saying, sun's out. Sun's out. That means your arms are showing and you're flexing muscles. No.
No, still got a jumper on. Still cold.
Okay, sorry, had to interject. I'll see you guys in a few.
All right. Silver at this very important pivot here. Looks like it could break down. Gold following through. And that's without any help in yield. So big risk off this morning. Ryan, any news triggering it? Is it just the earnings of Republic Bank yesterday that took everything down, or something overseas?
I can't really pin a headline on anything. These moves, there's a few breaks going on at the moment. Dollar China's breaking up. Been watching that for a while. Pumping that one in the chat room. That's having a move up.
Nice. Yeah.
It's
like a breakout.
Yeah, that's 691. Euro sterling is just perhaps on the way to making a little move above this 88.60 level that's been sticky for ages.
There you go.
Yeah,
looks good.
Dollar yen's up and down. It had a test of that 133.80, couldn't get through.
Yeah,
and off we
Still
go again.
Okay.
Back in 134. Dollar CAD's having a move up above the 50 fib of the recent range. Off that 138, 133, the 50 fib is right, or was right there, around 135.5, and we're making a break there, as you can see, above the moving average. So there's moves happening. There's no real news behind it, as far as I can tell.
That almost makes it more bearish to me. But just looking at the pound, something I brought up early in the week is that both euro and cable had inside weeks. Had this little inside week last week. We took out last week's highs. We're about, unchanged would be 24.41. We're lower on the week. So if it takes out the low of last week, you'll have a real bearish engulfing candle from up here. And euro failed to take out its old high too. Didn't miss it by much. Probably would have been, I would have liked to have seen it take care of business, but it's still up on the week, 89, not by much, 20 pips. So they're set up for this kind of action. I know it's only Tuesday, but pretty crowded. I heard through the grapevine, huge addition of net longs in euro last week on the COT, Commitment of Traders report. So maybe the Johnny come latelys are in, and we're going to get some type of rally. Dollar, higher low. And I was definitely open to seeing a new low. Blake talked about a scenario where we could panic a little under par. 99, here's where I have a return line that I thought it could make it to, but you know what? It's even more bullish if it holds here and starts heading up and puts in a higher low. Almost looks like it could do it. So S&Ps, just holding this its distribution. What would your guess be when you look at a chart like this? That it's just resting after an advance, consolidating its gains, or distributing up here?
No, I think it's consolidating.
Okay.
We've had all the earnings coming out, and the earnings haven't been, anything bad. They've been quite good. We haven't made gains. So we're not going up on good news. We're not going down on bad news. Everyone's waiting for what the next big kicker is. Answers on a postcard for that one.
I also noticed the big breakout in platinum failed. So, I mean, if you believed in this line that this was a big downtrend, right? Even go out to a weekly so you could see the other touch.
The way I've drawn it is if you go back to the high from February 21,
yeah,
it's we're almost there. We're not quite broken yet, but we're testing.
okay.
We're testing. Anyway, there's a few ways you can. There you go. You have the high there. If you anyway, it's
close enough.
Close enough for government work.
Or some people, some people say still it depends how thick your pencil is.
Good.
When you draw your lines, right?
Good saying, yeah. I like that.
Maybe use a dry mark. You can't make a skinny line with that. So
we call it a pencil now.
A pencil?
You said that.
Yeah, it's a pencil, right?
Okay.
Oh, I know.
It's not a euphemism, right?
Yeah, my mind's not there yet. But thanks for waking me up. Appreciate it, Steve. So also silver, guys. You two metalheads,
Well, we've talked about silver at length, and remember when we were breaking out, we took some off, and we're talking about the same kind of it's in a channel, and the channel's resistance now support comes in at around, depends on how you draw it, but it comes in at around, I think between 2380 and 24 is going to be a big level. Blake's talking. Yep.
Dale, an intraday comment. Platinum comment. I wouldn't pay attention to intraday price action.
Okay.
There's another reason why that's the case, because we have the futures expiring today. So what's happening with the big boys are all shorting, obviously, all these metals on, and what do? They sell hard in the beginning of the day, get the price low, and then they switch out of it. So basically they buy this futures back and then sell the next one. So you get this action usually on futures expiration day. You get a really hard move lower, and then that gets retraced a little bit going into the end of the day.
Biggest move I've seen in the gold silver ratio for a few weeks.
It was bound for some kind of a rebound, right? That was a huge move lower.
Yeah. It was actually overshot the head and shoulders, but came in at 80, and it got down to 78. But I would expect continuation move on this back to maybe 84.
I don't know if we're going to make it all the way up there, but nevertheless, a little bit of a recovery never hurts. Will give opportunities.
Yeah. So setting up breaks to buy there, and really anything else. It's going to be interesting to see what happens to Apple. Microsoft did break down yesterday. So, I'm still I'm in Apple puts. I'm in NVIDIA puts. I'm in semiconductor puts for September expiration. So that's my opinion. We'll see if we get the S&P to break, but semis were the leaders, and they're rolling over. And then you get something like Microsoft. Ryan, remember the chart yesterday, and it barely broke down, but it was sharply underneath that, but it's still a breakdown there. We'll see. Pre-market, everything's called lower. So I'm still looking for, liquidation. There's not much I want to be long, except, you know what? I looked at the TLT, and it's called to open a full point better. It held where it had to. I think I read Jim's letter the other night. He was long, but now he's going to get, maybe he's going to buy him lower, but we still haven't negated this formation. by pulling back. Always thought that the bond rally would be due to risk off. So if we break out, so that's something that's not off the table either. See what they're doing to the VIX, the broken VIX. Poor VIX is broken. You know, after working so hard all these years to try and give people excitement and take away their money with the products that they designed. Poor little VIX. I wouldn't be short volatility here. So a lot of complacency out there, guys. Everything's okay. And that says it right there. Don't take my word for it.
Yeah, the problem with the VIX is that we still haven't broken down in the S&P, and you know, we've talked about 4110, 4115 for days now, and it's exactly where we found support once again. I mean, admittedly, we are still there, very close, and we're lingering there, so it's dangerous. But we haven't broken yet, and as long as we haven't broken below, the VIX is not going to do much.
Can I make some comment
No,
about the
sure,
VIX?
you can jump in.
Yeah, no, I got something to say. I got something to say. No, I just wanted to say, you know, technically it's really, you know, for me, and I was having this conversation with Paulie the other day on the daily roundup, and you know, I have a hard time looking at like technical formations of the VIX, but VIX I use as a intraday kind of confirmation, if you will. It's like one of the several, you know, things that I end up using while trading. You know, it's like if I'm, let's just say, generally speaking, long risk, I just want to make sure volatility is staying compressed. I don't want to see it, you know, start to rip intraday or this. So it's a lot of day trading type of indication for me. And if volatility is spiking, you know, and it's higher intraday, and I'm sitting there trying to, you know, I'm trying to get long stocks or get long, you know, risk or sell dollars or something, that usually, you know, it's definitely that will prohibit me from doing it. So I kind of use it as more of a confirmation tool. It's really difficult to look at it technically when, you know, it's an asset that, you know, for all intents and purposes will always stay somewhat pressured. Anyway, just some thoughts that, since we were having this conversation the other day.
We don't want your thoughts here, Blake. No, I'm kidding.
I know.
Yeah.
Blake, what are you thinking about yields, Kman?
Good morning, Dale. Good morning, everybody.
Good morning, buddy.
Good morning.
I don't know. All the yields are coming off this morning, and the Europeans even a tad faster than the US. Again, we were scratching our head a little bit this morning as to finding a real reason why, but it's probably, as Stelios already noted as well. Oh no! Don't show that, please.
Why? Jamie said that's what Jamie. So tell me, that's what I mean.
The whole Twitter space is going completely berserk about.
Oh well. Anyway, so the VIX is at 17, and I'd say there's a little fear in the safest paper on the planet that people don't even want to go out 3 months for 90
Yeah,
day
because
bills.
of the debt ceiling, nervosity.
Well, whatever the reason, it shows.
You know what? The one that you should show that nobody is showing is the 5-year CDS, because that's much more worrying than this little thing.
Do you have a look at that?
No, I don't have it on my screens myself, but I'm.
Oh, that's your homework assignment tonight.
That went out to 50 basis points, and that is probably a little bit more worrying. But I would really categorize it in the thing that this market is just going up and down and changing opinion every 5 minutes. If the debt ceiling is
it's moving sideways, yeah.
If the debt ceiling is how shall I say, if they hike it, or if it's arranged again, then you will see this spread come in fiercely again. But it's a bit logic as well that this spread is going out so much because there's so much money in the money market funds that there's less money going in those things, and then you add a bit of nervosity around the debt ceiling as well. But so far, I think it's just like people are buying insurance. It's like your home insurance, right?
Right.
99% of the time, nothing happens, but you need to pay your insurance in case the 1% something happens, and that is really what is going on.
But you don't have to pay for this type of insurance.
Beg your pardon?
You're not paying in, like you are with certain hedges, on the market where you buy puts or whatever you do to hedge. This is just cash, deciding whether it wants to be in 1 month or 3 months. They're not paying anything for this hedge. It's just a choice to be in the front, the shortest term T-bills on the planet.
Yeah, I know. I mean, the thing is that even if it's not even if it's cash, it's still, if you look at the spread, it's still some form of insurance.
Oh, it costs you because you could get a higher yield going out 2 more months.
And then you couple it to the CDS. That's a bit of an insurance as well. So
yeah, those are what, like those derivatives. Yeah,
but
that's just good.
It doesn't really explain what's happening to the yields this morning, and I don't really have an explanation, barring again we ran into resistance, technical resistance just above 360 in the 10s and around at 425, 428 in the 2s, and now it's coming off. It could be like ahead of the data that we are seeing as well, because there's a lot of data coming out towards the end of second part of this week. So all of that may have to do with it. For the rest, I don't see any plausible explanation, barring a bit of risk off as well on the copper and everything. And
copper really
China
fell out of bed. That's why Aussie's
been moving up. I think it's all like one big trade again this morning.
In copper?
Yeah, I mean the whole thing,
oh yeah, it's a dollar, isn't it?
Here, it's one sea of red.
Yeah, it's all, and is it because of this?
Because of the Dixie?
Yeah, because of the dollar, or what's it because of?
No, I think
dollar has, we need big risk off to get something going in the dollar. Dollar's not going to lead it, but come into it. If it becomes severe, right?
It depends what causes your risk off. If it's a problem in the US, your Dixie is likely not going to go very high, but it can come off as we've seen already. Lower dollar, lower stocks, lower yields. I mean, it's been seen. It's not new. It's kind of how people trade after the pandemic as well. So yeah, but for now, I prefer not to judge too much. And we are slowly getting into end of month as well. So it's going to be a complicated trade, I think. In the meantime, what we do see though is that the euro crosses, take away the yen and the Swiss right now, they're still very, very big, very big. There's still the rebalancing going on from the rest of the world into euros. That's still going on. That's still there.
You think euro still wants 112 here?
I could do. And I think, when people say sell in May and go away, I don't know, because we saw an accelerated buy everything in April, which stopped after the second week. Now it could be that in May euro all of a sudden flies, but then we have, I think that we have to wait for the Fed and the ECB now to really know whether we are going to go to 112. That's my opinion anyway.
Okay, if you didn't know what the title of this chart was, so don't look at it. What do you do with a chart like this? And if you want it a little shorter term, and I'm going to even cover the title of, but it's too late. I know you already cheated and looked. What do you do with a chart like this?
Looks quite offered around 109.5 for me.
Yeah, and would you buy a breakout?
Could do 1,
Yeah.
2, 3, 4, 5 tries, not too far away from there. The sixth one could be the right one.
Yeah, that's what I'm thinking. Well, and the formation has a bullish bias because it's an ascending triangle. You know, I could adjust this line, and you know, there you go. So it's still an ascending triangle.
But if you go a bit longer, this could be, I don't know how you call it, like a pennant or so, or
no, it's a triangle.
Yeah, but if you go longer, a bit longer term, it comes from higher, so it could still be a bearish.
Oh yeah, yeah. But I mean, you look for descending triangles for tops and ascending triangles for bottoms. So that's, you know, Edwards and McGee. It's not me.
It's the Bible, baby. It's the Bible.
In the name of the Edwards and McGee and technical analysis, amen.
I tell you, amen.
Amen.
Hey, I wanted to jump in here
buddy.
regarding the China comments. You know, it was interesting. I was reading and because you guys were just talking about it, and you know, kind of everything that's, you know, China is just kind of rolling over. If you look at like the Hang Seng, you look at the, you know, the
grab the charts, bro.
China 50. All right. One of the things I was reading yesterday is I was reading Brent Donnelly's piece, and he was talking about all this geopolitical, like all this good news coming out of China. And then today you have obviously a breakdown in copper. You have here's the Hang Seng, you know, you can see, you know, China rolling over too. Here's copper as well. And you were just saying how it's all, you know, how it's all related. Well, you know, the thing is everybody can get really bullish on a market and it completely turn, right? It's the same situation where we had, you know, everybody's bearish on stocks a month ago. Stelios was running around with his hair on fire. Oh, I'm sorry, he doesn't have any hair. I'm sorry, he wasn't running around. Sorry, Stel. He was running around with his head on fire, yelling about everybody's bearish. You know, we're going to just get this squeeze in the equity markets. Well, everybody's bullish China. Everybody really seems to be universally, you know, and like I said, Brent made a point of this, but I haven't read anything that's really bearish on China either, you know, just kind of thinking back. But, you know, at the same time, you know, you got everybody thinking one direction and you're starting to see the other direction happen and really move. So that's just kind of like something I'm thinking about as we are nearing the 200-day moving average in the Hang Seng again. But you know, Kman, since you're still here, I wanted to get your thoughts really quick, and maybe you too, Ryan, from the Flow Show, because Ueda is the first. This is the most comments I read coming out of his mouth last night regarding monetary policy. Did you guys read into anything he had to say overnight?
Well, what I said on the Flow Show was that the one thing that stands out for me more than calling for changes is the over communication. I think we are dealing with somebody who is going to make it his job, his mandate to try and not surprise market, to make it everything as orderly as possible. That is what transpires mostly out of his frequency of commenting. I think
that's a good observation, Kman. It's like when Bernanke took over the Fed, right? Very similar.
Yeah, I mean, they probably learn from each other. But yeah, that more than anything else. I mean, it seems, well, still we have been saying that 100 times already. It's clear that they have to use this window to normalize, but how it's going to happen and to what frequency will depend on how close the communication still is between the government and the Bank of Japan. And for now, it's very, very tight. So I think we are in for the long haul. But we are probably going to get every meeting. We are going to get a little bit more comments about how they see things. But he looks to be a very frequent communicator. So that should take an element of surprise out of the market. That's my observation.
All right, Ryan, did you have any observations that you made from Ueda's comments there from the BOJ?
No, similar to what Kay's saying. We also heard from Suzuki as well, the finance minister. And what struck me is that they are starting to worry or show their concerns about what tightening would do to fiscal policy. They're going to have to start or issue debt under higher rates, perhaps. They've got all this bag of crap that the Bank of Japan's holding most of their bond market anyway. So they're making noises at the finance level about what would happen if rates rise. And I think that's going to be key, because getting out of this hole without causing a major mess is going to be the big job for the Ministry of Finance and the Bank of Japan.
So
Yeah.
the BOJ supposedly wishes for years a much higher inflation rate, but they don't wish to have higher interest rates. That's interesting.
No, they do, but it's they can't do what everyone else has done. The Fed, ECB, Bank of England. As soon as inflation got to a problem, bang, up went interest rates. No questions asked. This is what we're doing. No QE or stopping QE. Get out of QT. That's fine, but this is a country and a central bank that owns over half its government debt. It's not the same.
No, you don't understand. I agree with you. My point is that they're hypocrites. They never wished. They say they wish for higher inflation, but they're hoping they won't get it. But once they get it, there is no plan for it, and that can lead to a big crisis.
Yeah, well, and that's the crux of it all, right? That's why this meeting this week is going to be so important with what comes on Thursday. I mean, they could really upend the entire global market by if they act too swiftly, they act too quickly on yield curve control this week. That's why it's got to be on everybody's radar. Friday morning, if you're in Asia, Thursday night in the US, you need to be in front of your computer, at least looking at the headlines. I can guarantee you Kman's going to be up at 1 o'clock in the morning listening in. Do I got that correct, Kman?
Probably 2 o'clock, but yes, I will be.
Yeah, I guarantee that. And I know it's going to be a late night for a lot of you Europeans. So it's going to be really interesting to hear what Ueda has to say. And remember, with ForexAnalytix, you just sit around, just watching your live squawk here and, figure out exactly, all the headlines that are coming through the market. We'll be obviously in our chat rooms. Hey, real quick, we got a couple big earnings today. We have Microsoft. Let's take a real quick look at, take a look at Mr. Softy, as we like to call him on the trading floor. Microsoft is stalling at this ascending trend line. You can see relative strength is trying to roll over. I think this is kind of important here, technically speaking, because you start to see this RSI breakdown. It's going to suggest that we're probably heading back down towards the 50 DMA, maybe the 200 DMA. So Microsoft after the close, we have Google. Also, another big one. One of the things about Google, I'm just going to have to say this from a technical standpoint, and I think this is the point you were trying to make with the stock market in general, Dale, earlier today with your comments. I heard your comments, and I know what you're trying to
showed
draw.
Microsoft. No, I showed Microsoft, and basically, I think that was it, and Apple and the semiconductors.
No. What you were trying to draw out of the S&P is saying, asking Ryan earlier if it was a consolidation or a reversal or a distribution. Yeah. Look, I mean, the stock market has rallied and stalled. I mean, it's basically a bullish consolidation until proven otherwise. But this is like the opposite. You have Google that's a bearish consolidation, bear flag pattern until proven otherwise. That means we have to break back above 110, 111 for me to think that it's bullish. But the thing I would have to look at is Google, is obviously very ad sensitive too. So as the economy comes to a slowdown, you gotta watch Google. It hasn't rallied much, so I think it's more likely to trade back below the 200-day moving average than anything at this point. So just a little heads up with that. A couple other things I wanted to bring up. Do we have data coming out?
got Philly Fed services. It's not on the calendars for whatever reason, but I'll flash it up if there's anything important.
Okay, sounds good. And then the other consumer confidence, new home sales, that'll be in a little bit later this morning. A couple other observations I want to make in FX really quick before we go. The euro dollar trying to carve out a lower high, so just keep that one in mind. Benedict in our chat room. If you go right here into our chat room, and I'll take you over to Benedict's chart really quick. It's a good one. That's why I'm going to show you guys from this morning. Let me just get over here. This is that is not it. Here is the inverted head and shoulder pattern of the dollar, which I think is a good view. Thanks, Benedict, for this. And I'm going to use your chart here. So just keep an eye on this. There's a little inverted head and shoulder pattern developing with the dollar index. We have a descending, or cockeyed neckline, which would make it a complex inverted head and shoulder pattern, which are basically easier to complete when they're tilted in this direction. It means the target would be up here around 104, which seems logical in today's environment, especially when you have us sitting up at 4,100, and if risk breaks down a little bit and we trade back below 4,000, this is not an impossible potential move out of the dollar index. So I just wanted to bring that up. Again, that's in the ForexAnalytix chat room from this morning. You can see this is just our general chat, not even to mention what we talk about in the S&P room, the Flowonomics. This is the macro chat room where you're going to catch Ryan and Kman and all the big brains. They're in there. So make sure you check us out when you get a chance. But anyway, I think the market's getting a little spicy, guys. And I think, with volatility peaking up, copper's trying to break down, dollars firming up, yen looks a little stronger ahead of the BOJ. I think people might get a little nervous there. I think it's, this is the time that you need to have your radar, kind of up, chins up a little bit. I know the last week and a half of price action has put us in, kind of sleepy town a little bit, but I think things are getting a little bit spicier here in the market. So watch the S&P. You look at the S&P, we're at support. NASDAQ, pretty key support. Dow, not too far off of support in a descending channel. So, these indexes, I think, are walking a fine line here. So don't let your guard down. I think volatility might be just around the corner. Any last minute comments before Dale takes over for the interview? Steve, any comments from you this morning? Okay, Stelios. It looks like he took off too. Am I the only one here? Is this thing on?
Yeah, you've been talking to, yeah.
Sorry, Blake, just looking at that services number, which is a bit on the soggy side.
Oh, okay. Oh, it looks like everybody jumped in
for wages, the wages number there. Strong print, so inflation in the pipe.
God, that's why everybody just bolted back into the chat room. All right, well, Dale, I'm gonna leave you to it. I want to thank everybody for being part of us. Hey, remember, one of the ways to get involved in ForexAnalytix, check out the trader funding program, so you don't have to trade your money. You can trade our money. You can risk our money and make 75% of the returns. Just learn how you can take an assessment and be involved in the ForexAnalytix community at the same time. This way, you'll have other people to chat with, like myself and Ryan and Steve and Stelios and everybody else. So, Dale, I'm going to pass it over to you, buddy.
Hey, Michael Kramer. Thank you for your patience, buddy. How are you?
I'm good. How are you?
Good, buddy. So what's top of mind for you? Right off the bat, I'm going to hit you with it. What coming in today, pretty red across the board.
Yeah.
What are you telling your people?
So the interesting thing, I think you guys started to talk about this a little bit.
You want to share your screen, Mike?
Oh yeah, sure, absolutely.
Okay, so we have some visual, or if you want to come on camera,
No,
I'll freak people out too.
So
come on camera. See,
Yeah. We'll
the
keep
ghost. My hair is worth less today.
It's worth less today?
Yeah, because silver's down 40 cents.
Gotcha.
Anyway,
That's a
go
good
ahead,
one.
buddy. Go ahead, buddy.
So I'm like you guys. I'm looking for, pullback in the markets for, various reasons. The earnings so far this quarter have been better than expected.
Yeah.
But they're still showing, earnings down about 2.5% this quarter so far for the S&P. Revenue's just growing basically at inflation, 5.5%. So, I think, from that perspective, earnings estimates for the S&P keep dropping. So you're paying 19 times earnings for basically no growth, and the inflation rate on sales, which just seems expensive to me for a market from a fundamental standpoint. Plus, you guys started picking up on some of this. I heard when I joined, with what you're seeing, today in copper prices. I actually had written a note last night because I've been watching oil, and what's odd is that despite the cuts in production, oil tried to break out here, and then it just totally collapsed. And I'm looking at it and I'm wondering, is it that we're just filling a gap, or
right.
or is there something else going on here?
Demand destruction.
Right.
Is that what we're looking? I mean, if I have to look at a parallel economic force for why oil and copper would go down, it's got to be demand destruction.
Well, and that's sort of the immediate thought would be, right, is that if oil's not breaking out, given OPEC taking 1 million barrels a day off, and then you look at copper prices, and those have really acted poorly.
And there are a lot of copper bulls out there, Mike. I mean, there's I see people, they're copperheads. They're like pennies.
It's funny because
the old pennies.
I really got into, there was a period of time where I really got into metals and mining companies. And that was when, after 2009, the first round of QE, I was, whatever, 10 years, 12 years younger then, and much more, bright-eyed and optimistic on things. And, QE certainly, made me think, well, dollar depreciation, I want to own things that are, what does Gartman say? When you drop it on your foot, it hurts.
Yeah.
And so,
but for Gartman, it's his trading journal.
Who is it? What's that?
What he's talking about, it's his trading journal.
Right.
Drops and falls on his foot. Reminds him of what he did the last 10 years in the market. Anyway,
he's always
I'm sorry, Mike. I'm through doing stand up during your interview. No, because we do have, the markets do seem like they're at an inflection point, because they got so, I felt like we're in the eye of the hurricane with compressed ranges and real low vol and extreme complacency. And does it feel that way to you?
Right. And it's kind of odd because, you have this whole thing with the debt limit going on. And that was a part I was going to get to in a second as well. And then, of course, you have, US CDS, which the 1 year is trading at an all-time high. The 5 years are continuing to move higher. And yet the VIX is trading as if, there's no issues in the world. But what I was going to say about copper was that, the argument was that, 2009, 2010 copper was going to go to the moon. Copper's always going to the moon, right? There's never enough of it. There's never going to be and so there's always this bull case, and it just never seems to happen.
But it did in 2020. That was pretty good.
It did for a little bit, but I mean, where, are we, is it really, look at where we were in 2011, look at where we were in 2006. So, I mean, from a trading standpoint, I mean, there are cases to be made, but look at the ranges you get in it. So I think, when people get overly bullish on copper, I always kind of take a step back and say, I've heard this before. And, when you start looking at, copper and breaking down, oil breaking down, and then, you add in, iron ore prices breaking down, right? And so now immediately you go, okay, iron ore breaking down, copper breaking down, oil breaking down, this is a sign of something going on in China, right? Who are the biggest consumers of copper, iron ore, oil? It's China, right? So then, you immediately start looking at these indexes, and I heard you guys talking about it, CSI 300, at a critical level of support here. I would say right around this 3930 region, right? So that's not looking very good. You have the Shanghai Composite also at a critical level of support here, 3,222. And then, of course, you can see, HSI. I used to be an international trader for equities and domestic equities at one point in my career. So I'm very attuned to what's happening in these foreign markets. Hong Kong, huge rebound off the lows, really just sort of failed at a key resistance level up in here and looking awfully, weak at this point. And then you throw in, South Korea, again, getting hammered the last couple of days.
False breakout. Yeah.
Right. You got up to a very big point in time here. You broke down. I look at the Kosdaq too. Major reversal taking place there. So what I'm watching for here is, how does Australia respond to this? Because Australia, obviously a big trade partner with China, obviously export oriented heavily into commodities, iron ore, big producer of copper. So if there's going to be an issue, it's going to show up in Australia at some point. And the reason why I care about Australia is because it correlates with the Dow
China.
very, that's the Dow Jones Industrial and the Australia 200, right?
Okay, because the Australian, currencies are our bailiwick here, and you've had strength in euro and cable, and the weak sister against the dollar has been the commodity currencies, Aussie, Kiwi.
Right, and I've also been watching the Aussie dollar, Japanese yen cross as well. This is also a pretty good risk on, risk off gauge.
Yeah.
And so, it's starting to look like maybe there's some of this, hope that China was rebounding and this China reopening play seems to be losing some of its luster. And that would certainly support this idea that, maybe equity prices in the US haven't felt it. And they haven't really felt it yet in Germany either. Here you can see the DAX, huge move. I mean, kind of crazy that we're sitting not that far from the all-time highs. And again,
diverging, glaring divergence. I see you have the lines on
on the
RSI underneath.
Yeah, bearish
this last
divergence.
high. The best divergences, Michael, are when you don't have to use your cursor to see if it almost got to the prior high.
Right.
It's so glaring, naked eye, you can see that divergence.
Yeah, and I've been watching this for a while, and I'm just kind of wondering when it's going to roll over. But the other thing that's also in play here, outside of the growth component, is what's going on with liquidity in the market. So I have
the 1 month against 3 month T-bills.
No,
or the M2.
So
M2?
I have it. No, you're jumping ahead. I have a model here that tracks changes in central banks' balance sheets.
Okay.
So if it loads, it takes a while to load because it's a big thing.
So the squeeze towards solvency is underway.
This is our realized volatility. Hold on. Sorry, this is kind of slow to work sometimes. Here it is. So here's your DAX, but I'll put in the S&P because we're talking about US. So the white line is the combination of the Fed, the ECB, the BOJ, and the PBOC's balance sheets. And you'll see it in a second once it loads. Oh, this is just the Fed balance sheet. I wanted to show you this one first, though. There it is. So you see the relationship between the two?
Yeah.
I think it's pretty easy to see. The white line being the global balance sheets, the blue line being the S&P.
Yeah.
And what's more notable here is that you've seen there's been a divergence between the liquidity on the balance sheets and the divergence with the S&P 500, right? And so it usually tends to trail that by just a little bit. So again, this is another reason why I'm thinking the markets have some to fall here. When we look at just the Fed balance sheet, this is what I'm tracking here are reserve balances, right? Which are a measure of excess liquidity sort of held at the banks hold at the Fed. And this was due to that, remember when the SVB debacle with all the excess liquidity? Look, it's all being drained out right now. This is due to the reverse repo facility, which is tracked every day at 1:15 New York time. They update that number. All that money that's going into the money market accounts we keep reading about, all that money goes into the reverse repo facility at the Fed, which acts as a liability on the Fed's balance sheet and drains reserve balances, plus the TGA, which is sort of at the heart of the debt limit ceiling talk. Right now, we're in the middle of tax season, right? Tax season is ending. So the TGA is rising as tax receipts come in, and that also works to drain reserve balances. So you can see that overlay coming, and this is also suggesting that we should see a drop in the S&P 500. And what's interesting,
so monetary conditions are tightening up again, and the market's ignoring it.
Well, yeah, it's eventually gonna have to notice it, right? Because eventually that liquidity is going to leave the system, and then it will have to tighten up. This is Bitcoin. Bitcoin's a little more sensitive to it, and you can already see that the correction in Bitcoin has already started to some degree.
Yes. Yeah. Oh, yeah. To a pretty
and
good
so
degree.
what I've been doing a lot is watching Bitcoin, not because I believe in it. I'm not a believer in cryptocurrency.
Do you trade it though?
No, I don't go anywhere. I don't go anywhere near it.
Okay.
Because I'm just not a believer in it at all. But I watch it more as a liquidity measure, because again, here's your support level in Bitcoin, and it looks like we're ready to me, it looks like we're ready to fall off a cliff, right? Because there's a lot of space here to fall because of the move that we had in it. So I think we have two things going on here, which is number one, you have liquidity coming out of the market because we had all that excess liquidity come in after SVB. You have potentially brewing what looks like maybe a little bit of a growth scare forming in Asia at this point.
Okay, it starts in Asia instead of here.
Right, and that would maybe explain why you're seeing, yields in the U.S. move a little bit lower, despite, U.S. CDS trading at, these crazy levels, because there's nothing else that really makes sense to what we're seeing here. Here's your 1-year U.S. CDS contracting.
Wow.
Well, look at this.
Yeah. Wow.
This is 2008.
Wow.
And then if you look at the 5-year CDS, and you go back. Oh, that's the wrong one. I'm sorry. That's a high yield credit spread.
Yeah, those spreads haven't blown out yet.
No, I'm waiting for that to happen, but here's your US 5-year, right? So we're right here. This is your 2011, debt downgrade from the S&P. Debt the first time we had it, then here's 2008, 2009. So again, you can see very elevated levels here. And what's surprising is that, the VIX typically moves along with this to some degree. It's not a perfect relationship, but I mean, you can see that when we got, elevated, CDS on the VIX tended to have these little move higher, and you're just not seeing that at this point yet. It's actually just melting and going
the opposite way.
Direction, which makes kind of no sense. And that's largely because you've had this, drop off in realized volatility because we're in such a tight trading range. Now, what I think is happening or going to happen is that you're seeing, this realized volatility sort of stop falling, which is putting a floor in the VIX. And then eventually, if we can, you get the market to sell off a couple of days, 40, 50 basis points, this realized volatility is going to start rising again, and that's going to start putting a bid back into the VIX.
Okay. As far as yields are concerned, Mike. Can you pull up the TLT?
Yeah.
Do you follow it as a proxy?
I do. I was actually on what's that show called? Making Money with Charles Payne.
Okay.
And we were talking about it.
Making money is such a pain?
No, with Charles Payne on the Fox.
Oh, I was just kidding. So anyway, I look at this as a huge ascending triangle with a breakout at 109. And then last week it looked like,
so
that wasn't going to happen.
How would you draw it, like this?
You could draw it off the bottom of October to those
back
two.
Here.
And then a flat line on top.
Right.
Yeah, like that. And you have an ascending triangle. You probably shouldn't do anything until it breaks out over 109. But doesn't that look bullish to you? Like it could turn into something bullish?
It could. What's interesting, though, is that I don't know if you follow Robert Prechter at all.
I used to.
Well, his Elliott Wave International, I subscribe to that, and I read it every, when they put out their alerts. And they actually have this as labeled as a 4 with a 5 coming down.
Okay.
Which is interesting, right?
Yeah.
And
well, I just read that their COT report shows the largest massive short position on the long end of treasuries.
On the 30-year?
I think so.
Let's see. Because you know what? This stuff I'm finding is not and the reason I was looking at this one before, I don't remember where I saved it now. Oh, the reason why I was looking at this before is because everyone keeps talking about the largest short position in non-commercials in the S&P. And you can see that on the net, it is, but not on gross, right? The reason why this number is so low is because the longs are just leaving the market.
That's what it feels like.
Well, that's what it is, right?
The compressed ranges.
Yeah.
And,
and we look at let's look at the cotton, see what it is for the hold on.
I think I just saw that news yesterday. I don't think it's hedge funds. Hedge funds are as short, that's a narrative you hear. They're more short than ever.
So the bond future. So the net, well, you can see the shorts, 185,000 shorts.
Okay, so it's not a record net short position.
No, not even close.
Yeah, okay.
That's the long bond.
Okay. All right.
So,
all right.
Well,
what do you think? I've been kind of
wait. Let's look at this one. Maybe it's not the net. Maybe it's the gross. No, that's not either.
Some of the leadership in the market, like Microsoft breaking down under 262. NVIDIA put in a 3 drive. The semiconductors are kind of breaking down. Anyway, I thought I'd get your impression. So, yeah, I've heard both. But over 109, I think the wave 4 scenario is wrong.
I agree with you that if you break out above 109, there's room to probably get to 112, maybe even 117.
Yeah. Yeah.
My thing, though, is that the way I look at it is that we've had a lot of news that was really supportive of yields breaking down.
Yeah.
And that hasn't happened.
True.
And so my thinking is that, if we've had all this news that suggests that yields should break down and they're not, what does that really tell you too? Is that, we're just holding the 200-day moving average at this point.
Yeah.
And what I'm sort of noticing here too is when you look, we've been consolidating sideways, but notice that the RSI is actually starting to shift higher now.
Yeah.
And that could be telling us that momentum is starting to actually swing back the other way. And so I'm of the idea that we could see, the TLT actually move back down towards this 99 region first.
Well, if it's a wave 4, it's going to make new lows. It's going to take out the October low.
That's what their argument is that it's going to make a new low.
Okay.
I don't know what gets us there. It's going to take.
How about downgrade because we can't get our act together for the debt ceiling?
I mean, that's certainly possible. And that would certainly be a good reason. The other reason being is that what I'm thinking is perhaps we're entering some sort of period of stagflation where, you go back to like, not necessarily a 1970 style, but where, we're in this sort of, high inflation world because we're doing more onshoring. You don't have enough workers to fill all the voids, but yet at the same time, growth is just really subdued.
Do you have a dollar view, Michael?
Yeah, so it was interesting you guys mentioned that inverse head and shoulders on the hourly chart.
Yeah.
Because I had noticed it too. And what I'm sort of noticing too on the dollar also is maybe I have a lot of shit drawn in here. Is maybe you're getting what looks like a potential double bottom forming.
Okay. Yeah, from the prior low, it took out the lows by about 30 cents.
Yeah, and the other thing, and what also is noticeable too, is that, you notice here that we made a low, RSI makes a new low, a lower low. Here we make a variable.
It diverged this time.
You're diverging, right? So you're getting almost like a bullish divergence on the RSI. Yeah. So I'm also looking for a move higher in the dollar. I was looking for a move maybe back to around 105.85, maybe the 200-day moving average or so.
Okay.
And that,
I'm thinking higher.
I mean, it depends. I mean, if you're going to get the 30-year yield,
110.
If you're going to get the 30-year yield, then 110 certainly would be possible.
Yeah. Okay. Michael, best place for people to follow you besides at Michael Mott CM on Twitter. Your work is outstanding. I'm so glad our paths cross on Twitter because, I know it's not a normal interview because, I throw some of my views in there, but it's great having a conversation with you.
Yeah, I've been following your stuff too, and I really enjoy looking at a lot of it. But you can follow me on Twitter. Also, I'm on Substack now, readingthemarkets.substack.com. And I'm also
show it if you have it for
what's that?
You could show it if you have it for people to see it. They write down so Michael's got a great eye, and what I like about his work is, and people's whose work I really like, he looks beneath the surface for these relationships and things that.
So I was writing about this last night, a global slowdown may be on the horizon, and I was specifically I started to hammer in on this oil trade, the copper, the China trade, and what this all may be, kind of meaning and leading into. I did this in my Substack for my my paid subscribers, and then I also have a Seeking Alpha Marketplace group called Reading the Markets as well, and I kind of been hitting on the same thing there, where I also have a chat room and I communicate with my subscribers.
Okay, Reading the Markets by Michael Kramer.
Right.
So, Michael, appreciate your work. It's insightful. And you crystallize and give us some things to think about that we weren't thinking about before we heard you this morning. Thanks for ratifying the community.
Thanks for having me.
All right. Good hunting, my trading warrior brother.
Okay, you too. I'll turn off my screen now.
Okay, and I'll be in touch with you.
Okay, that sounds good.
Keep you in the rotation, bro.
Yes, please, anytime.
Okay. So Michael Kramer, everybody. Hope you enjoyed it. You could join the team. Follow him at Michael Mott, M-O-T-T, CM, right there on Twitter. And you could join the team in 16 minutes on the Morning Edge. Good hunting, everybody. Michael, they enjoyed you. And everyone have a great day. Don't just count your pips, count your blessings. We're fortunate that we can afford to gamble a little money and speculate in the market and still pay our mortgages and everything else we need. So remember, a lot of people don't have this kind of, and I call it risk capital. If you can't afford to lose it, don't use it. See everyone tomorrow.